a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Small Cap ETFs is what we're going to talk about now with our ETF Research Director, Nina Mishra, who joins me. So small cap ETFs are really doing quite well, kind of like the small cap stocks, right?
Right, yeah. So small cap companies have been outperforming their larger cap counterparts, I think, since March for the past about 3 months. And there are many reasons behind this outperformance.
Okay.
These smaller companies are usually domestically focused, so they are relatively less exposed to trade and tariff concerns or all the geopolitical risks which are prevailing of late. These companies are seen as bigger beneficiaries of tax cuts and deregulation. And also, since they are domestically focused, they are less exposed to the dollar headwinds. We know that the US dollar has been rising this year after many months of underperformance. And a strong dollar hurts larger companies which have significant foreign revenue exposure. Smaller companies are not that much hurt by a strengthening dollar. And also, we all were talking about global synchronized growth earlier this year, but it seems that global synchronized growth is now losing momentum. Growth in Europe, Eurozone,
yeah, we saw that with Italy, right?
Yeah, is slowing down, and emerging markets are getting hurt by a rising dollar. So US companies seem to have a better outlook in this environment, particularly domestically focused US companies.
And overall, less volatility?
Less volatility, and you talked about Italy. The crisis in Italy may further strengthen dollar against the euro, and that will also benefit smaller companies more.
Yeah, it's an interesting situation because up until that market reaction to the developments politically in Italy, everyone was under the impression, I think, that, you know, just because our economy was doing pretty well here, all the other economies of the industrialized nations were as well. And now we see that that's not the case.
That may not be the case this year.
Interesting.
It's going to be interesting.
You've got some examples of some of these small cap ETFs here. First one being the PowerShares Russell 2000 Pure Growth Portfolio.
So note the word pure over there.
Yeah.
So it selects stocks which have very strong growth characteristics and then weights them by their growth style scores.
Okay.
So you can go to the quote page on Zacks.com, and from there you can go to the ETF external home page and look at the details. So it selects styles with strongest growth characteristics from the Russell 2000 index, and they are weighted according to their style score, as I mentioned. You can also look at the portfolio, and I wanted to add one more thing before we go over this portfolio, that the smaller cap ETFs that we are talking about today, they are all growth focused ETF.
Okay.
Within the small cap universe, growth ETFs have been doing much better than small cap value ETFs, because these ETFs focus on growthier sectors of the economy, like information technology, industrials, financials, healthcare, which are doing better this year.
Important note. Okay.
Yes. So this ETF has almost 40% allocation to IT, which is another reason why it has been doing so well. Technology companies in general have been doing very good this year. Then about 21% to healthcare and about 16% to industrials companies. Now, it is a relatively smaller ETF with just about 58 million in assets under management. Little bit on the expensive side, 39 basis points in expense ratio, but because of its focus on pure growth stocks and a large allocation to IT, it is up about 14% year to date.
All right. First Trust has one as well, their Small Cap Growth Alpha DEX Fund.
So it's a smart beta ETF. The ticker is FYC. It uses quantitative screens to select and weight stocks. Assets are about 237 millions under management. It is the most expensive ETF of the three which we are discussing, charges 70 basis points in expenses because it aims to outperform the market by using smart beta index. It is up about 12% year to date, and again you can look at further details for this ETF by going to the sponsors website through the Zacks code page, and it selects stocks from the Nasdaq US 700 Small Cap Growth Index, and it looks at growth factors such as price appreciation, sales to price, 1-year sales growth, and then ranks them according to the quantitative methodology that they use. Again, you can look at the holdings and sector allocations. So healthcare is the largest sector for this ETF, about 28% of the portfolio, and IT is about 19% of the portfolio, industrials about 15%.
All right, and then finally, SPDR S&P 600 Small Cap Growth ETF.
So this is the most popular, one of the most popular ETFs in the space. It has about 1.88 billion in assets under management. It is also one of the cheapest in this space. It charges just 15 basis points for its expense ratio. So very cheap, very popular ETF, and you can look at the details for this ETF by going to SPDR website. It selects stock from the S&P 600 Small Cap Growth Index, and it selects stocks which exhibit strongest growth characteristics, which are based on book value to price ratio, earnings to price ratio, and sales to price ratio. And you can look at the portfolio and holdings too. Healthcare is the largest sector in the ETF as well, about 21% of the portfolio, and industrials and technology are the second and third largest.
Okay, so how do these all stack up to the broad market?
So on this slide, I have the comparative performance of these three ETFs with the broader market ETF, which is the S&P 500 ETF, ticker SPY, and you can see that smaller cap ETFs started outperforming since March. And the first one that we discussed, the PowerShares product, that is up almost 14% this year, and whereas the other two, the SPDR and the First Trust products, they are up between 11 and 12%, whereas the broader market is up just about 1%, almost flat this year.
Yeah, that's a pretty big improvement there in those other ETFs. Do you own either of these?
I own SLYG in the ETF investor portfolio that I manage.
Okay, well, thanks for the information. There is more ETF information, by the way, on our website, Zacks.com. Get to the home page, use the Funds tab in the top toolbar. It will show you how to get there. With Nina, I'm Terry Ruffalo.